Hi everyone, never a dull day in oil, and the shock announcement by Saudi today that they're not going to pursue their major growth project, which would have taken capacity from the headline to 12 million barrels a day to 13 million barrels a day by 2027, is a significant project cancellation, a spending cancellation that has fed directly through to the share price of Schlumberger, which is getting crushed today, being exposed as it is to international. Now, some people are saying that Saudi will offset some of that lower oil spend on more gas spend, and so it's not the end of the world, but ultimately this is a very big deal, and with oil services essentially set at the margin, the loss of this major spending from Saudi is clearly an outright negative for the services, which we've not been a big fan of, as you know. It is positive for the long-term oil price. It does take 1 million barrels a day off the market for 2027, which ultimately should increase the curve, and as a result should also be positive for the equities, the US E&P equities that clearly benefit from Saudi not spending a ton of money to grow its capacity, whilst at the same time they're still holding effectively 3 million barrels a day of spare capacity. They're at about 9 million barrels a day today of production. Their all-time high was 11.8 million barrels a day during the market share war of 2020. And so you can see that they really don't like the expense of carrying all the spare capacity, and there's absolutely no point in them spending a ton of money to further increase spare capacity. So it's a pragmatic decision by a government that's spending a lot of money elsewhere. Sorry, I forgot my headphones today, and so you're going to have to put up with the subway coming past, which is massively noisy, by the way. But I'm getting you the tourist shot here of Washington Street in Denver. Elsewhere, Marathon Petroleum, by contrast, had outstanding results and are benefiting from some of the infrastructure issues that we're seeing, with further delays again now rumored around the TMX expansion. The likelihood is that Canadian crudes stay extremely discounted, and that's feeding directly through to the bottom line of the big refiners. Marathon had outstanding capture on the quarter here and is returning all the cash to shareholders, and as a result is having a great day, certainly relative to Schlumberger, is crushing it. And our general stance to be negative service, positive refining is working well here, and we think that continues. We can see great results from PBF, for example, based on what we're seeing from Marathon. And of course we expect Exxon to beat on Friday, which is all good news for the oil sector, which we think will outperform the market here, based on what we think will be sticky inflation that's being increased by all the issues with global shipping and the inability of the Fed to excessively lower rates, or at least lower rates as fast as the market is anticipating. We think sticky inflation plus less rate decreases from the Fed will be bullish for the oil sector relative to the market, especially as, not for the services so much, although they all beat, but this is negative news from Saudi, but certainly from the refiners and from the US E&Ps. Well, we expect good results here, starting basically with Exxon and Chevron on the upstream side on Friday. Both of them, I think, will put in good results, and so we're pretty happy here that the Saudi announcement here is bullish for long-term oil prices, which should feed through to the equities. We do expect inflation to be sticky because of issues in the Red Sea, so we like the oils, and in amongst that, we're very happy to see the Marathon Petroleum results coming in so strong. And sure, Schlumberger is a shock one-off downgrade to their margin outlook, but generally speaking, we haven't liked the services anyway. Have a great day.